to start our webinar right now. And before we start, just a small risk disclaimer for you guys. So today's webinar is intended for educational and informational purpose only, and participants shall not take it as financial or investment advice, nor a trading signal. The accuracy and reliability of the information provided cannot be guaranteed. Q Prime and I hosting the sessions are not liable for any losses or damage resulting from the use of the information presented. So participants are responsible for independent verifying information and considering their own financial goals and risk tolerance. And just a kind of reminder, Forex trading can consider a very high risk investment. So you need to have a very good risk management strategy before you enter the Forex market. All right, so without wasting any time, we are going to start our webinar right now. So for tonight's webinar, we are going to discuss on the fundamental analysis, one of the crucial trading tools for the trader around the world. No matter you are an experienced trader or you are a new trader who are trying to enter the Forex market, this is the webinar should be considered very important for everyone to learn things together. So the key highlight that we are going to discuss today is, first thing, let you guys understand why is the fundamental analysis are very important. And certain new trader, I don't know what is fundamental analysis. I will also provide a very short explanation on it. And then how can you use the fundamental analysis to enhance your trading journey. The things that we are going to discuss tonight, right, is about what is the main fundamental things now happening in the market. The first thing should be on the economics data. I will also let you guys know why is the economics data are very important. And when you look at the economics data, right, you can see that we do have tons of the economics data that is going to release every day, no matter from a lot of different countries. So how can you understand this data and digest it? And then how will this data affect your trading strategy in future? So this is the thing that we will also discussing. And then next thing we are going to discuss about three main important economics data, which is the employment, inflation, and GDP. Just a kind of reminder, this is also the data that are very important, that especially non-farm payroll is going to release on a Friday. So I will also give you guys a brief explanation on how is this data going to affect your Forex trading strategy. Next thing, we will move on towards the monetary policy, which is one of the major things in 2024 that you must understand to it. Because in 2024, after the COVID-19, after the war, the main biggest fundamental news should be on the monetary policy decisions from the global central bank, especially from the Federal Reserve. We will also let you guys know what is monetary policy in a very simple terms and how can you understand the monetary policy and then enhance your trading journey. Next thing, we are trying to explain about the interest rates. If you guys notice on the news, nowadays, you can notice a lot of interest rates. This kind of keywords keep coming out in the website, saying that the central bank is going to increase the interest rates or reduce the interest rates. That's why the currency movement should be high or should be low. So this is also the main thing that I'm going to explain to you on how can the interest rates affect the currency. And then what a trader need to do is trying to predict what is the central bank going to do with the interest rates, even they want to increase the interest rates or reduce the interest rates. So this is also the things that we will talk about it later. And then finally, we will also explain about the geopolitical tensions issue. Just a kind of reminder, you can notice recently the overall movement for the gold are very volatile due to certain geopolitical issue. So this is the thing that links towards the fundamental analysis side also. So later I will also expand on it. How can the geopolitical tensions issue affect the asset classes, especially the safe haven gold? So this is also the key thing. This is all the key thing that we are going to discuss today. So the first thing, the importance of fundamental analysis. So you can notice every day we do have a lot of different types of trading strategy. Then we do have a lot of different types of charting, indicator tools, something like that. And then certain people only focus on technical analysis, something like just drawing a line, predict they will go up or go down. In my opinion, I do believe that fundamental analysis is one of the crucial tools for you to success in the long-term trading journey. I give you an example on previously. So previously, right, if you guys still remember, during COVID time, the overall price for the crude oil are actually dropped aggressively. This is a main fundamental thing that going to affect the market. So if you're able to understand the fundamental during that time, you might be able to catch a very big fish. But of course, if you only apply on the technical analysis, no matter how strong is your technical analysis, fundamentals sometimes when the things come out right. For example, you want to try to catch some rebound trends when it reaches the support level, but due to certain fundamental news, it will actually cause, no matter how good is your technical analysis, it will also not align with your trading strategy one. Sometimes the fundamental come out, everything should be changed, will be changed. So this is a key thing that you need to aware on it. And until recently, we do notice that we do have the rising geopolitical tensions in the Middle East country. So this is also the main thing that caused the gold price to go up aggressively recently. This is also one of the explanation on why is the fundamental so important. This is a very important storyline that can enhance your trading strategy in future. So to put in a very simple way, is fundamental can able to let you have a brief understanding on the longer term basis trading, and then you can apply fundamental with technical analysis. After you understand what is the story things, what is the things that happens in the market, you can try to use the technical analysis and try to find your good enter point. For example, if you are understand that currently the risk appetite in the market might not that high due to rising geopolitical tensions, then one of the consideration is you can consider to long go when there is high risk in the market. But when you understand that you can long go, but what is your good entry point, then this is a time when you need to apply with your technical analysis. So you can use technical analysis to identify your good entry point or your TP level at where your stop loss level. So these are the things that you can combine everything together. So it's very good for us to understand both. Once you understand fundamental, you can get a very, very longer term trend perspective on certain products. Then you can apply back the technical analysis to find a very, very good entry point. Okay, so this is the why is the fundamental analysis so important, and why this is also the reason why we want to hold a webinar to let you guys understand and learn something from it. So I think you guys also understand, right? Normally fundamental, we do have a lot of news, especially when you open Bloomberg, you open Reuters, there are tons of news that you should be very difficult to digest everything. So Q Prime do actually provide a service to let our clients know about what happens in the market recently. So we will try to focus on a few most important pair that you don't have to go search one by one. So for example, if you are interested with gold, then you go Google and search gold, then the information provided might be too much for you to go through one by one. So in order for us to let you guys understand more on the fundamental news, Q Prime do actually provide a lot of different resources to hope that we can get our clients' latest update every day, to hope that you guys can learn from this fundamental. We will also expand on how is this fundamental analysis affect your trade, affect certain asset classes. So we do have Q Prime website that you can also refer to it. So let me show you. So every day we will update the news every day. So to help our clients to have a brief understanding about what's going on in the market. So this is our website page, and then the first page is we will update about the summary of the latest trends in the market yesterday, the biggest trend, the biggest movement. So we'll update about, you can see that Japanese yen already updated, then dollar, and then we will also update on the oil. The next thing we will also cover about the technical analysis as well as the fundamental analysis. So this is one resources that can also help you guys to have a brief understanding about what's going on in the market. But of course, if you insist you want to do certain research by yourself, still can. Q Prime website is just offering you a very simple path. But sometimes if people want to have more research, more knowledge, then of course you can also feel free to go for others too. Or for example, if you look at the Q Prime research website, you can see certain things you don't understand. You can also go and search more things. So this is the website for here is only give you guys have a brief understanding about what's going on in the market, to hope that you guys able to receive the most important news every day. So just a kind of reminder, this website we will update every day. So this is a key thing that you can try to go through it. So yeah, these are the resources that Q Prime is going to provide. And then next thing, as we mentioned also, we do have the Q Prime Telegram group. Feel free to follow us. And the difference between the Q Prime Telegram as well as the Market Insight, right, the Q Prime website, right, is in Telegram, we will normally focus on a very short-term analysis on certain products, like short market recap things. So we will only update certain big impact products like gold, dollar, oil. If they are experiencing a very huge movement, then we will provide certain point on analysis on what's happened on the gold market yesterday. So you can also refer to that every day. So these are the resources that Q Prime is going to provide to help that, to hope that it can help you in your long-term trading journey. And then the next thing is we do also have webinar. Especially on Friday, we will also launch another webinar about the non-farm payroll. Non-farm payroll is also one of the important fundamental analysis for the trader around the world to monitor on it and then trying to use this news to trade from it. So you can also feel free to register with the Pure Prime webinar. We do, I think every week, we will provide you guys webinar to hope that you guys can learn things together. Okay, so Friday, we do have the non-farm payroll data. You can also refer to our website. We will update you guys over there also. So this is the main resources that our Pure Prime is going to providing to all of you guys. So yeah, you can feel free to follow it, especially for Telegram group. Okay, so now after we let you guys understand where can you obtain all this information already, next thing, we are trying to teach you how can you identify what information is very important when you don't want to go through the Pure Prime website, you want to go to other third-party sources like Bloomberg, investing.com, Reuters, you want to go through the news. So what is the important news that you need to read? Because if you open Bloomberg, for example, right, there are tons of the things going to update every day. You cannot it's very time consuming for you to go through all of the report, right? So it's better for you to look for certain key points that you want to understand on it, and you go through those articles. You just focus on a key point. So the first thing is very important for all the Forex trader in fundamental world, which is what we call the economics data. So you guys understand that if, for example, we are going to open the investing.com, we do have tons of the economics data that are going to release every day. So what is the most important economics data that trader need to eye on it? What is the most important data? So I already filtered out and let you guys understand as a trader, what data are the most important one, or what data have the biggest impact towards certain asset classes. So I simplify it in 3 data. So the first data is employment data. The second data is GDP data. The third data is inflation. So actually, right, you can just focus on these few related data. Then I do believe that it can help you to have a greater understanding on certain Forex movement already. So yeah, for example, if you are going to open for investing.com, you can see that we do have tons of the data going to release every day. But I try to summarize that 3 important data, which is what we call the employment data, GDP, as well as inflation. Later we'll go through it. Normally, you don't have to go through all of the data. Just these 3 data should be great enough for you guys to understand what's going on in the economy. Okay, so when we look at the economics data, we need to understand how is this economic data going to affect the Forex movement, the commodities movement. So I put in a very simple way. When you invest in Forex or foreign exchange, right, what you need to concern about is whether which country are performing well. They are quite different with the equity market, like stock market, because stock market will be quite simple. You just identify what company earn more money, then you can do a lot of competitor analysis and some intrinsic cash flow analysis on certain company to see that whether this company is going to go and earn more money or not. But in Forex trading, we want to invest in the country, right, that are very rich and very the economic growth of the country are grow very fast one. So how can you identify what country do performing well compared with other countries? Why do you justify that the US economy are good? That's why dollar go up. How can you know that US economy is very good? So of course, we need to understand about the economics data. So by using the economics data, you will be able to understand which country are performing well and then what is the strategy. So to put in a very simple terms, when the economics data of that country showing a very positive sign, it means that there will be higher chance the currency is going to increase in future. So this is a key thing. So first thing that we are going to cover is employment data. So employment data is very important. Normally, if the employment data provide a positive reading, the currency will go up one. This will link to our Friday's non-farm payroll result. So Friday, we do have a US non-farm payroll data. For new trader, non-farm payroll is the data that can calculate the employment status in the United States. If the NFP provide a high reading, which means that currently the hiring activity in the United States are very, very good. So this is a thing that can also boost up the demand for dollar, because if the job sector in that country are very good, means that a lot of people are getting money. So they are very rich with higher salary. So of course, when this thing happen, right, a lot of investors will have more confidence towards this country, then their currency should be going up. Next thing that we are going to talk about is the GDP data. It's what we call the gross domestic products. So you can notice that GDP measure the growth rates of monetary value of all goods and services that are produced within the country in a specific time frame. So you don't have to go and understand all the difficult definitions. You can understand GDP as the one of the indicator to identify the economic growth of that country. For example, so if the gross domestic product, the GDP data on that country is very high, higher than the market expectations, so normally it means that this country, their economic growth are very, very good. So their currency will normally go up one. So how can you access, where can you access from this data? Same thing, you can just go through the economic calendar, everything will be coming out. You can see that GDP, but this one is from Hong Kong. That's why it's not very, very important. GDP data from Hong Kong. So the more important one should be linked towards the dollar, the US GDP data, China GDP data, Euro, UK. This should be the main thing that you can focus on it. So put in a simple term is higher GDP data, their currency will normally give a very, very good result. And then the next thing that we are going to talk about is the inflation rates. One of the famous tools that everyone is going to discuss in 2024. Because in 2023, right, we can notice a lot of news was regarding on the inflation rate hit all-time high. The US inflation hit mostly 10% per year. So some of you might not understand what is inflation. So to put in a very, very simple term is, inflation is something, is the price of the goods sold. Everything regarding the price, it will link towards the inflation. For example, if you notice recently, your food, everything, the petrol, everything become more expensive, it means that your currency value, your monetary value of your currency are dropping. So this is a thing that can cost you a lot and then make you suffer from it. For example, if inflation keep going up, right, but your salary increment not that high, everyone is going to suffer. So this is the main issue that the Federal Reserve need to solve in 2023. So this is a key thing. This is also reason why due to very high inflation in the United States, and yet a lot of people cannot get a salary increment, the Federal Reserve decide they want to lower down the inflation or stabilize the inflation. So what is the Federal Reserve decide to do? They decide to increase the interest rates. So when the Federal Reserve decide to increase the interest rates in order the way to stabilize the inflation, you can notice in 2023, last year, the overall trends for the dollar are increased aggressively. Until certain point, the Federal Reserve said that, oh, now I do believe that interest rate already high enough, and inflation in the United States already start to slow down. Then after that, they decide to maintain interest rate. And then now in 2024, we do have a lot of humor saying that the Federal Reserve might be considered to even cutting the interest rate. So this is also the main push that caused the dollar to drop in November. So this is why inflation is very important, because inflation is one thing going to affect the interest rate decisions for the Federal Reserve. And when everything linked towards the interest decisions is going to affect tons of the asset classes. For example, currency, that we will talk about it later. Why is interest rates and currency are related? And then interest rate will also link with the stock market and even the crypto market. This is also the thing that we will talk about it later. But before that, you need to understand why is the Federal Reserve want to increase or reduce interest rates. Their key goal is for try to stabilize inflation. As we mentioned just now, inflation is one thing considered that not very good when they are very high. For example, if everything, the price of goods sold around you, their price keep become more expensive and expensive, but your salary increment are not that high. For example, last year, US inflation hit around 10%. Maybe your salary increment only 2 to 3%. So a lot of people is going to suffer from it. So this is the thing that government need to solve. They need to bring down the inflation rate of 10%. So now they success already. That's why we do have a lot of rumors saying that the Fed should be stopping increase interest rate already, and then the Fed should be even cut interest rate. So this is the main motive lah to explain what happens to the gold market recently. Okay, so now after you understand the inflations, we need to move back towards the monetary policy decisions already. So why when inflation very, very high or when things become very expensive, the central bank need to decide to increase the interest rates. So you need to understand that why is the price of certain goods become more expensive? It's because the demand are very, very high. A lot of people are going to purchase of that goods, right? So what you need to do to lower down the price is you need to lower down the demand. So how can you lower down the consumer demand on certain goods? How can you do it? So the first thing the Federal Reserve need to do is increase the interest rates. So how can increase the interest rates cause less people to spend their money? So here is explanation, a very, very simple explanation. So let's say if inflation are too high, like for example 2023, the Federal Reserve decide to increase the interest rates. So what happens when you just do to increase your interest rates? You can think in two ways. If you want to expand your business, you need to borrow your money, right? Interest rate, you can also link towards loan rates or borrowing costs. So when interest rates are very, very high, it means your borrowing rates, your borrowing costs are very, very high also. So when you want to purchase car, you want to purchase house, but with the higher interest rates, you might be reconsider on it. You might or even not to purchase because the borrowing costs are too expensive already. So you will reduce your lending, lead to a slowdown in the prices. Okay. Next thing is you can understand like when the inflation are very high, then they want to increase interest rates. Next thing is going to affect it is the deposit rate. Deposit rate is some money that when you save in your bank, the bank is going to give you a deposit rate. So when the bank going to give you a return, when you save money in the bank, if the return are very, very high, it will actually encourage a lot of people to save money in bank. So same thing, when people want to save money in bank, they will spend lesser. So when they spend lesser, GDP will be stabilized and inflation will be slowing down. Okay. In long run, the interest rate you can also link towards borrowing costs because this is the thing that can also link towards US equity market one. So for example, if you are a very, very high growth technology company, okay, so you want to expand a lot of your business. So how can you expand your business? You can expand your business by research and development, right? You need a lot of money to build your business, to innovate to build a lot of innovative product. So how can you build it? For example, you are Apple CEO. When you want to make iPhone become better, of course, you need to spend a lot of money in R&D to make it become more innovative. So how can you spend your money? How can you get all this money? Is you by borrowing money from the bank. So imagine if borrowing costs are very, very high with high interest rate, right? It will discourage those high growth companies to borrow money from those banks. So when they do not borrow money in the bank, the business is not going to grow. Apple is not going to grow. It's not going to expand their business. So this is also the same thing that when Apple is not going to expand their business, their share price might be affected also because investor might think that Apple already reached their peak. It's not going to improve already, so they sell off their stock. So to put in a very simple way is when interest rates are very, very high, we can expect the company growth should be lower due to high borrowing costs. They cannot R&D already, and then investor confidence towards that company will be dropping also. So this is a key thing that trying to link interest rates towards the equity market. So yeah, when interest rates are very high, stock market will normally drop one. This is the key thing in 2024, so that you need to understand on it. So now we are going to move back towards the Forex exchange or the exchange rates. So interest rate decisions, how can the interest rate affect the exchange rates? So the most famous one in the news now is regarding on the Federal Reserve. And also later today, we do have the FOMC meeting, and as well as the interest rate decisions, they are going to provide or give from a very significant movement on the dollar. So why is interest rates importance towards currency. So to put in a very simple explanation is when that country have a very high interest rates, they will normally attract a lot of foreign investors to invest on it. Because you need to understand that interest rates is considered one of the risk-free rates or deposit rates. Like when you save money in the bank, the deposit rate is what we call the interest rate. So if the interest rate are very, very high, it means that when you save money in that bank, the bank is going to provide you a more risk-free return. So when, as comparison, you want to save money in US or you want to save money in Japan, for example, Japan interest rate should be around 1%, example, 1%, but US are offering you now 5% of the interest rate. So if you are maybe from Singapore, you have $1,000, you want which bank you want to save in. Of course, you might be considered to choose to save in US bank, because when you choose and save in US bank with 1,000 ringgit, 1,000 Sing dollar, and then the bank offering you 5% of the risk-free return, so you are going to gain with 50 Sing dollar. But as comparison, if you save money in Japan, Japan only will provide you with $10, 10 Sing dollar, right? So as comparison, you can understand that when the country have a very high interest rates, their currency will normally go up. Why? It's because it will encourage more and more people to save money in the bank. Or to put in the professional term is, it will encourage people to buy the bond of that country. So this is why. So you skip all those explanation, right? You can just come to an conclusion. The conclusion is when the country interest rates are very, very high, or if the country announce that in future they will decide to increase the interest rates, this is a key thing that will move up the foreign exchange. Their currency will normally go up one. So this is also one of the reasons why dollar rebounding. It's because of recently we do notice tons of the US economics data are slowly showing a very, very good result, including the GDP as well as previous manufacturing data. US economy are performing well and recovering well right now. So when the economy are recovering, there will be chances for the Federal Reserve to even decide to increase or maintain the interest rate instead of cutting of it. So as we mentioned just now, high interest rates will cause the currency increase. So now we are expecting the Fed should be considering to maintain their high interest rates. So this is one of the reasons why dollar keep rebounding recently, especially in 2024 January, because after that 2024 1st of January, US keep releasing a very, very good economics data. And then you can notice all around the news is US release a positive economics data. Now the expectation of the easing interest rates are dropping already. This is the main reason that dollar go up. This is why some article may not be explaining why is interest rate linked towards the exchange rate. They directly come to conclusion. So after a 10 to 9 webinar, I hope you guys can able to understand it. So why is interest rates go up, exchange rate will become better also. It's a reason because of investors will try to save their money in higher interest rates country, which interest rate you can understand like deposit rate. Okay, so this is the reason why you need to understand it, because really in 2024, all of the news might be hovering around the interest rates one, especially later today, the FOMC meeting. So you after you understand this theory, now then you go and listen what's the FOMC, the Federal Reserve member is going to say. You can have a brief understanding on it. Then you slowly you build more of your knowledge, trading knowledge from over there. You need to practice lah. So after you understand this theory, you need to apply it later today. We do have an actual fact, the FOMC meetings one. So you can go through it later. We are expecting dollar as well as gold should be experience a significant movement later today. Okay, so this is a brief understanding. And then now, just a very short forecast on what the Federal Reserve is going to do later tonight lah. So very simple. According to the CME Fed Watch 2, there will be high chance that the Federal Reserve might be considered to maintain their interest rate instead of cutting it. 98% of the people are expecting the Fed will be maintaining the interest rate. This is the key thing that might be benefiting on the dollar, but it's because a lot of market already digest the news. They long dollar since long time ago with these expectations. So now you enter again might be too late. So what's next? What is the next thing that you can do after you understand that the Fed might be maintaining interest rate? So the next thing is you need to understand their statement. What the Federal Reserve member going to say. So their statements are very crucial because normally sometimes they will try to forecast that after they maintain interest rates, they will also try to forecast the US economic's outlook, whether it's good or bad. And then they will also even forecast in March another interest decisions, whether they want to increase the rate or decrease the rates or maintain the interest rates. So their statements are very, very important for us to focus on it. It's unable for us to forecast what he might say. But as a trader, you need to keep monitoring on the news, on his statement to have a better trading signal. Okay, so very important the key thing that you need to monitor later today. So FOMC meeting. So simple explanation is if they say they want to increase the interest rates or maintain a high interest rates, there will be chances for the dollar to go up because overall tone are very hawkish. And if they say that in March or later this year, they will cut the interest rate aggressively. This is a thing that can cause dollar to drop. When they cut interest rates, currency will normally drop because nobody want to save in that country. Okay, key thing that's going to happen today. So now after you understand all these brief fundamental, we try to identify certain important data trends, like trying to understand what country is going to release certain important news, and then what is your trading strategy, and then how can you analyze the market in the next few days. So this is the data they're going to release until the Friday, the whole week data. So today we do have a lot of crucial economics data, including the FOMC statement, Federal Reserve interest decisions, and FOMC press conference. So this is a key thing that you need to monitor on it. FOMC statement to see whether their statement are tilted toward hawkish or dovish, or it means that whether the Federal Reserve is going to decide to cutting the interest rates, maintain or increase the interest rates. It's impossible for us to forecast what is he going to say. So you need to monitor on the news and then monitor on the dollar as well as gold charts. So after today FOMC statement, we do have another important thing, which is the non-farm payroll as well as unemployment rates. So economists are expecting the NFP might be provide a negative reading, decline from the previous reading of 216K towards 173K. So economists are expecting the US jobs data are not that good, but there will be also risk that or chances that suddenly the actual data coming out and it's actually better than market expectation also. So when this thing come right, normally the dollar will going up because it means that if NFP provide a very good reading, right, it means that US economy are performing well. So a lot of investors are performing well and yet better than the market expectations, better than the economics expectation. So this is a key thing that can build up more confidence for the investor to reinvest their money into the US. Or to put in a very simple term is if this data provide a really high reading or even better than the economics expectations, their currency will going up. So this is all the key thing that we are going to look at this week. Okay, just a kind of reminder, Friday will also provide a non-farm payroll NFP webinar. Just feel free to come and join us. This is a brief explanation on what we need to focus on later this week. Next thing is also linked towards the fundamental. After you understand all the interest rate things, and then how the interest rate link towards the currency, and then you also understand the data trend. How can you identify which country their economy are actually perform better than others? After you understand all these things, next thing we are going to move on should be on the geopolitical tension, which is also the main thing, another main thing that's going to affect the overall market as for now. So what is the geopolitical tensions? To put in a simple term is now you understand that we do have a lot of war happening in the market. We do have Palestine and Hamas war, and then the Russians as well as Ukraine. So this is a key thing that will be also affect the market aggressively. For example, how these geopolitical tensions, right, will normally also benefit safe haven demand. So to put in a simple term explanation on what is safe haven demand. So what is safe haven? So explanations to safe haven is normally when the risks in the market are very, very high, investor will invest on it. A good example of the safe haven is gold. So for example, if the risks are very, very high, for example, if US are having war with another country, so of course, the company in US might not be able to earn that much. And then the stock market might be crashed because nobody have a lot of confidence towards US economy already because they have a lot of tensions with other countries for example. So when investors don't have much thing to invest, what can they invest? When you invest in stock market, company is not going to earn because high risk due to war. So why are you going to invest? The good criteria is you might be considered gold. So this is the reason why gold is one of the consideration as the traditional safe haven, because it can seems like a store of value during times of uncertainty. So this is one of the example that why is the gold market increased aggressively in 2023 example. If you guys still remember, Russian and Ukraine start a war during that period. So this is the main push that caused the gold price to increase aggressively. And one of the proof that geopolitical tension or fundamental analysis sometimes are very important, because if the war become intensified, the gold price will be increasing aggressively. Now it's also remain the same thing. If you have noticed on the news, there are 3 US military was killed due to war. This is also the main push that caused the gold price to increase further, because we don't know what's the reaction the United States is going to take after their troops were killed. So there are tensions, the relationship might be become worsened in United States, and then risk appetite in the market might be declined. So this is one reason that caused the gold price to increase a lot. But due to another fundamental regarding of the investors are still nervous about the FOMC meeting, this is also another reason why investors decide to take profits after it's hitting the feeble resistance level. That's why it's dropped back after it's increased aggressively. But fundamentally, due to this rising geopolitical tensions, the appeal for the gold might be still good. And if the tension become worse and worse in future, investor might be normally consider reinvest back towards the safe haven gold. So to put in a very simple terms, if you look at the news and you notice any news regarding on the war issue, the trade war, these kind of things, right, relating to the geopolitical tensions, things, right, first thing you can consider is you can try to invest in safe haven. So what is the safe haven that PewDiePie is going to provide to you? Then you can have some choices like silver, gold, certain thing like that. But its good recommendation is you can refocus back on the gold market, because the gold movement are very high, especially during rising geopolitical tension in the world. So this is also another key thing that you need to continue to eye on it, the geopolitical tensions thing. Okay, so yeah. After that, after you understand all of the latest, most important fundamental news in 2024, next thing you need to do is try to combine with technical analysis. So this two things is very important, because fundamental is just one tool for you to understand the story backline in the market. And then you can try to apply your technical analysis and identify what is your good entry point. Where can you put your TP level? Where can you put your stop loss level? So technical analysis, we will also launch another webinar next time for you guys to learn from it. But the thing is, you need to understand that you need to try to combine everything together. So in order for you to have a great trading journey, technical analysis itself might not be enough, because no matter how good you analyze on the chart, but suddenly sometimes if there is a significant fundamental movement in the market, you are going to lose a lot. Okay, so yeah, this is a key thing that we are going to discuss today. So just a kind of reminder, we